everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the psychology behind the moves today so that we can become a better trader tomorrow. And today, we're taking a look at crude oil. Now, if you can't tell by the chart, if I click the little F here in the corner, we've had a monstrous gap higher from yesterday. Now, this big gap higher, that puts us in the range of possibly saying, well, there's an unfilled gap all the way over here at 44.65. Maybe that's what they're looking for. And, well, they filled that and they kept going. So very strong move that's continuing to the upside. Now, if we look at the overnight session, that gives an even bigger clue because now we're looking at an even larger bullish trend. Very strong continued up movement. We had that big spike yesterday afternoon starting at around 12 o'clock, and it hasn't stopped. Now, that bullish sentiment that we're seeing to the upside, that's even further relayed by what we're seeing in the intraday. Now we come to the day chart right now, and we open with a huge gap up, and we're seeing failure from the sellers. That's a big clue. So now we start off with a little bit of confusion. We have a bear candle, then a bull, then a bear. We're probably starting to see the start of a range unless the buyers really start picking up speed and driving this market. We get a bull candle, followed up with a bull candle, followed up with a bull candle, followed with a bull breakout, followed with continuation. So now, okay, we're no longer looking at possible range, or if we do go into a range, it's not going to be for a while because the buyers are taking control. This is allowing people to say, okay, you know what, after something like this, with continuation, although it doesn't look that great, it's still closed bullish, I need to start considering becoming a buyer wherever I can, right? This is obviously aggressively bullish. Now you start looking to buy in where possible. Now, arguably, a pullback into this big breakout candle, which was allowed right there. And you can see all of that wick, buyers bought into it like crazy. Outside of that, though, buying above it. Either way, buyers are buying into this move, looking for continuation towards the upside. It continues up. They get a little pullback. They can't even trigger in the bears before it shoves right back in the opposite direction. Another beautiful reason to become a buyer if you didn't take the initial signal to finish the job off to the channel highs. Once it gets to the channel highs, everybody starts taking profit, right? Big wick on the top, bad follow through, and we start seeing a turning point. Now, we don't want to be sellers here, okay? The only selling that should be taking place is for your profit targets because you've been buying the entire time. So looking at this move up here, we know that buyers are taking profit. That's very obvious given the big wick on the highs, but we also know that a lot of buyers, they may have missed this entire run up and they're going to want to buy the pullback. So they're waiting for a reason to get in. A nice strong move down into the prior area of support right back here where we got a little bit range bound. Buyers start buying in already. Now, they can't even come back to the moving average, but there are going to be a lot of buyers that want to sit on the sidelines. You don't want to be the first one to the party. And if anything, you'd be much happier if you could trap the sellers in first and then push up to the highs. We get a beautiful bear signal that allows the sellers to try to come in, immediately turns back against them. That's a beautiful bear trap, and that is a secondary bounce for the buyers in an already known area of support. Every buyer on the planet now is going to be jumping in on this, looking for them to return back to those highs. And that's exactly where the market went. But before it did it, they also had another trap right here. They pulled back. They tried filling that small little gap right there. The sellers were probably in this thinking, oh man, we messed up. We need to get out of this. They take their small loss. They turn into buyers. Buyers buy the pullback. More buyers flood into the market, and it slams the market up once again. So just a beautiful example of what to do when you have a runaway market. Don't go counter trend. Whatever you do, do not sell in a strong bullish market. Wait for the sellers to get stuck and then slam it right down their throat. And even right now, we still haven't gone all the way back up, and there are likely a ton of stops above the highs from sellers who've been trying to sell this move down, thinking this has got to be the top, and we're going to fall all the way back down and fill the gap. Well, yeah, unfortunately for them, they're not feeling too great right now. So make sure to stick with the trend if it is a strong trending day. Don't go against it because it's only going to be wrought with pain. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it useful, and we'll see you next time.